Guys, it's 2023, and if by now you don't have a rule-based strategy that has proven to be profitable over time, you are going to keep burning accounts over and over again. In today's video, I am going to be showing you how to make trading decisions using market structure. But before we jump into it, please like this video and subscribe now. I hope I didn't scare you though. Anyways, price doesn't move randomly, and that is why we'll be talking about market structure today. Market structure helps traders identify trends in the market, and this helps you know when you should be trading and when you should be staying out of the market. We have three types of trends in the market, which are the bullish trend, the bearish trend, and the range. I mean, how else does the market move? You see that it's going up, or it's trending downwards, or it's moving sideways, right? So I'll take it again. Three types of trend: the bullish trend, bearish trend, and the range. Now, how do you identify these trends? Let's start with the bullish trend. Now, in a healthy uptrend or in a healthy uptrending market, price is expected to be going, let's say, pushing up, then give us something like this, then the next wave upward, breaking above this previous high that it created here, and then this will automatically make here a high, a higher low, then a higher high, right? And if the market is actually in a healthy trend, price is expected to come back into this zone to retest this previous broken high and then go for the next wave again, taking out the previous high, right? So now we have higher low, and here we have a high, a higher high, and now a new higher high, right? So this is the characteristics of an uptrending market. Then we expect price to come back again to this previous high that was broken to give us the next wave and take out this previous high in that order, right? Now, this is how you know you are in a bullish trend. What about bearish trend? In a bearish trend, you do the exact opposite. So let's say price is pushing lower. You want to see it create a low, a lower high, not breaking above this one, then push all the way down again, taking out this previous lower low created here, then making this a lower high, right? And now we have a new lower low. And what should we be expecting next? For price to come back into this zone and give us another wave to the downside, taking out this previous low it created here, and continuously in that order. All right. And lest I forget, sometimes you can see price decide to do this. Let's say instead of price pushing back into this zone and continuing downward, you will instead see price come back into this zone before pushing downward. So does this mean we have seen a change in trend? No. Why? Because this was a low, or let me say this was a low, this was a lower high, then it created a new lower low. Then while it was pushing back, it came back into this previous lower high it created. It failed to break above it. No, it didn't break above it. Instead, it came there and rejected that area to push price lower, breaking below the previous lower low it created. Now, how do you identify a ranging market? In a ranging market, we all know that in the ranging market, price moves sideways, right? Between support and resistance level, right? So how do you know we are officially in a ranging market? Now, this is how I personally determine a ranging market. Let's say price was coming from above. Let's look at this scenario. Then price came into this zone, and for whatever reason, that zone pushed price higher back into this zone. And then price came here. Instead of breaking below this zone, it didn't. It instead bounced off again, came back into this resistance level, and for whatever reason again pushed price downward. So when this happens, when we have two touches to the support and two touches at the resistance, then you should start looking at the possibility that we are in a range, or a range has begun. I hope you get the point. So that is why before you take any trade, first, you want to identify the trend so that you know what you should be expecting, what you should be waiting for, and how to act accordingly to that opportunity. So let's say in a bullish trend, like I said earlier, we are supposed to create higher highs and higher lows, right? Then what happens? Let's say when we create a new higher high, and maybe you didn't catch the trade when it was going up, what should you do next? Plot your levels around the previous swing high before it created a new one. Now, when price is coming down, it's better to play it safe by not trading the pullback. All right, by not trading the pullback. All you should be interested in is to catch the next big wave when price completes his pullback and push price all the way to the upside. And of course, in a downtrending market too, now this is a lower high, lower low. So what should you be expecting? Let's say you move this initial wave, then what should you be expecting next? Plot your levels around the previous swing low, then wait for price to come back into it. Just be patient for it. Then what you want to do within this area, you want to look for trading opportunities, because you want to catch the next big wave that is going to eventually come and break below this previous swing low created here. So I know the question that may be going on in your mind right now is, okay, how do you know when there is a change in trend, or how do you know when a change in trend is happening? Now let's use a bullish scenario. So let's say price is creating higher highs and higher lows, higher highs, higher low, higher high, higher low, higher high, and higher low. Now I want to know when there is a shift in trend. All right, so before I continue, let me just keep this here. There's a formation I use personally, and I do this on the daily time frame. It is called the 1, 2, 3 formation. All right, so this is how I determine this is how I confirm a shift or a change in trend. All right, so like you can see in this bullish scenario, we are creating higher highs and higher highs, higher lows, higher highs, higher low. Now what I want to see, if a change in trend is in play, I want to see price come and close below this zone here. Let me map out the zone so you can see. I want to see price come and close below this zone here. Remember, I said ideally in an uptrend, we should be creating higher highs and higher lows, higher high and higher lows. But this time we came and we broke below this zone here. All right. So now what I want to see next is for price to come and give me a retest of this broken zone, right? If you look left, then for price to keep pushing lower, creating a new lower low. I hope you get the point. So now this is what I call the 1, 2, 3 formation, right? This is 1, the one that actually took out the previous low. This is 1, then this is 2, which is the pullback into that broken area, and then this is 3, which confirms to me that we've created a new lower low, right? So let's say I still miss this opportunity. Now, what do I want to see next? I want to see price pull back into this zone, and then I want to catch the trade from here using any of our 10 trading strategies that I talked about in the course, all right? Or if you are not a student of the course, any strategy that you use for your entry and exit, whatever, just look for the opportunity around this zone for trading opportunities to catch the next wave to the downside. So I hope you understand. Now I've talked about a bullish trend, I've talked about a bearish trend, I've talked about a ranging market, and I've also talked about how to identify a change in trend. Though in this scenario I used a bullish trend turned into a bearish trend, so you can just flip it the other way around. A bearish trend turned into a bullish trend. Time will not permit me to do that right here, right now. So now let's look at market structure on a real chart. Now this is the US 30. All right, so between this zone and this zone, it was obviously a down trending market, creating lower lows, lower lows, lower lows, lower lows, right? And lower highs, lower highs, lower highs, all the way to the downside. Now this is the daily time frame, as you can see here. Now you can see that for last week we had bearish push to the downside. In fact, prior to that, we've been seeing some bearish momentum, but between this zone and this zone, we were breaking highs, right? Creating higher lows, and we're creating high. Okay, this is not a high, so we created a higher high here, breaking above this, and then we pull back, then created a new higher high here, right? Then we pull back, thinking we're going to create a new higher high, breaking above this. Let me just draw this so that you can, let me use my marker to plot this so that you can see. We came here around this zone, we're still in a downtrend. So when we saw this first leg, we took out this high here. Does that mean we didn't trade between this zone and this zone? Of course, there are numerous strategies in our course that gives us trading opportunities, all right? But I'm just talking about market structure here, because these are all the things you put together to trade successfully in the market. So now we broke above this zone, and then price came back, give us a retest, which was our higher low, and then price pushed upward, breaking above this newly created or the previous high that it created. So broke above it, creating a new higher high. So price pushed back down to create a higher low. But what did you notice? We failed to create a new higher high. So as a matter of fact, we came into this zone here, and ever since price ranged for a bit. And what happened next? Price came down and we pushed below, creating a new lower low. Can you see that? We closed below this market structure here. So we created a new lower low. And when we created a new lower low, which is our 1, then we went back for 2. And what happened? We came back for 3. So now we have a change in trend. And if we go to the monthly time frame, you can see last month we closed bearish for last month. Then if we go to the weekly time frame, you can see this giant bearish engulfing candle, leaving us with a double top here. I'm going to tag that video. I made a video on how to trade double tops and all of that. So you can go and watch that video. You see we've broken below the neckline. And if you come to a daily time frame where I determine a shift in trend, you can see that we've created a 1, 2, 3 formation. So what should we be expecting for next week? We'll be expecting 2 things: for price to either pull back into this zone and then we catch the next big wave, or for price to still come below here before giving us that pullback, creating a new lower high, and then we'll push price below. So this is how you can use market structure to improve your trading consistency in the market. Do yourself a favor, purchase our course and join the League of Profitable Traders. The link to the course is in the description below. Thanks for staying to the end of this video. Hit the subscribe button and like this video if you haven't. Have a fantastic week. Bye guys.